Okay, why do grade 11 accounting learners lose easy marks on bank reconciliation, even when the answers is right in front of them? Your bank statement gives you one balance, and your cash journals gives you another. And suddenly accounting starts feeling confusing. But here's the truth. Nothing is wrong. You just need to understand the timing difference and missing errors. And in today's lesson, I'm going to break down bank reconciliation step by step for you and show you why the amount differ or the balances differ, and also help you to avoid common mistakes that most grade 11 accounting learner make in test and exam. And by the end of this video, you'll be able to understand and prepare a bank reconciliation with confidence. Hello and welcome to RMH Accounting Extra Lessons Academy by me, the relentless Monama Humphrey the man, where accounting is made simple and exam success is made possible. Let's get started. Now, as a grade 11 accounting learner dealing with the bank reconciliation, when you deal with the bank reconciliation chapter, the first thing that you need to know, the most important thing for you to understand is that all the transactions that are recorded into the business bank account, all the transactions that are recorded into the business books which affect its bank account are recorded in either the cash receipt journal or the cash payment journal. And these transactions are recorded as follows. Number one, money deposited by the business. When the business deposit money, this transactions is recorded into the cash receipt journal. And at the end of the month, the total receipt is posted to the debit side of the bank account in the general ledger. Reason being, the bank, which is an asset, increases, and all assets increase on the debit side. Number two, all payment made or all electronic payment made or all payment made electronically or by check are recorded into the cash payment journal. And at the end of the month, the total payments are posted to the credit side of the bank account in the general ledger. Reason being, the bank, which is an asset, now decreases, and all assets decreases on the credit side. So the bank decreases because money is going out of the business bank account. Now you need to understand that electronic payments include payments such as internet transfer and instruction given by the business to the bank to pay a third party an amount of money every month, right? That is an instruction. That instruction, it also applies. If the business instructs the bank to pay a certain amount of money to the third party, so that is an electronic payment. Now, at least once a month, the bank will send the business a detailed bank statement together with various documents relating to transactions that take place between the business and the bank and which appears on the bank statement. Are you with me? Now, the bank statement will reflect the following transaction. It will reflect the balance at the beginning of the month or the period. It will reflect the deposit banked by the business or banked directly by the other parties. It will also reflect the payment or the check drawn against the business bank account. It will reflect the balance at the end of the month. Now, we are talking the bank statement. Now, what exactly is the bank statement? If you were to be asked, what is a bank statement? What would you say? Now, here's what you need to say. A bank statement is a copy of a customer's ledger as it appears in the bank's books. That is a bank statement. Now, it is important for you to understand that from the bank's point of view, the transactions in the bank statement will be recorded as follows. When the business deposits money into the business bank account, then this transaction represents a liability on the part of the bank. It represents a liability on the part of the bank. So the bank owes the money deposited by the business to the business. So this transaction will reflect as a credit entry or as a credit balance or on the credit side of the bank statement. So in other words, the bank regards the business as a creditor. Remember, a creditor is a person to whom a business or another person owes another person or another business money. So in this case, the bank business owes our business money deposited. Are you with me? Number 2, payment made against the business bank account by the business will reflect on the bank statement as the debit entry. And this is because this payment reflects a reduction. It's regarded as a reduction in the bank's liability to the business. And this payment will be reflected, or it will be recorded on the debit side of the bank statement, or it will reflect as a debit entry on the bank statement. Number 3, the bank charges. Now, all of the bank charges will be reflected on the debit entry or on the debit side of the bank statement. This is also because these charges represent a reduction in the bank's liability to the business, or a reduction in the balance of the business amount in the bank statement. So the amount that is in the bank account, it gets reduced, or it is reduced by these charges. Now, this is how the bank shows. This is how the bank will show the transactions. Now, let's make it practical. Let's make a practical application with regards to what I'm explaining to you now. I'm going to explain, I will try to explain everything as easy as it is. Now, here's the practical application. Now, you need to remember, or it is important for you to understand that the transactions recorded by the business and that recorded by the bank are of the opposite point of view. I repeat, transaction recorded by the business into the business books with that recorded by the bank into the bank's books are of opposite point of view. And let's make an example with that. Now, here's the thing. In the business books, all cash transactions will be recorded as follows. And in the bank's books, the same cash transactions will be recorded as follows. Number 1, when money is deposited into the business, when money is deposited by the business, this deposit is recorded into the cash receipt journal, right? And at the end of the month, the total receipts are posted to the debit side of the bank account in the general ledger. Again, this is because the bank, which is an asset, increase, and all assets increases on the debit side. Now, in the bank's books, the same cash transaction, when the business deposits money into its business bank account and the bank receives that money, now the bank will record this deposit as credit entry. And the reason why the bank recorded this transaction on the credit side of the bank statement is because this represents a liability on the part of the bank So the bank owes the amount of money deposited by the business back to the business. In other words, the bank regards the customer, which is the business, as a creditor. The bank is the one that owes the money deposited by the business to the business. Number 2 transaction. In the business books, payment made when the business make payment by check or EFT from the business bank account. These transactions will be recorded in the cash payment journal. The cash payment journal, which is the business book. Now, at the end of the month, the total payment will be posted to the credit side of the bank account in the general ledger. And this is because the bank, which is an asset of the business, it starts losing money, and all assets decreases on the credit side. So the bank decreases, so all assets decreases on the credit side, which is why it is posted to the credit side of the bank account. Now, the same transactions in the bank's books, which is a bank statement. So the bank book is a bank statement. The same payment made by the business from its bank account on the bank's books, which is the bank statement, this transaction will be reflected as a debit entry, and this is simply because it is regarded as a reduction in the bank's liability to the business, or it reduces the amount of money in the business bank account, and it will be shown on the bank statement. That is how these transactions are recorded. So the bank will record it in this way, and the business will record it in that way. Now, I understand that as a grade 11 accounting learner, this explanation, to grasp everything that I've just explained at once, it might be difficult for you, but let me make it simple for you. Now, the simple formula with regards to how the bank record the transaction and how the business record this transaction. Here's the formula that you need to understand. It's simple. Just keep in mind, drill this in your mind, that each transaction or the transactions that reflect as a debit entry in the business books will reflect as a credit entry in the bank's books. Are you with me? And the transactions that reflect as a credit entry in the bank's books will reflect as a debit entry in the bank's books. I hope it makes sense, right? Now, when all the deposit and the payment made by the business reflects on the bank statement, then the balance as per bank account must correspond with the balance as per the bank statement. However, let me repeat again. I am saying, if all the deposit and the payment made by the business, all of them reflect on the bank statement, then the balance as per the bank account in the general ledger must correspond with the balance as per the bank statement. However, due to timing delay, omission and errors, it is unlikely that the balance as per the bank account in the general ledger will correspond with that of the bank statement. And in this situation, an item for an item comparison between these two sets of books will be needed to ascertain any discrepancies occurring between these two sets of books. To find the discrepancies, the difference. Now, this put us in a situation whereby I have to explain to you the discrepancy between the business books and the bank's books. Now, here's what you need to remember. It is important for you to understand that the transactions that appears on the bank statement, or the bank statement, will only reflect the transactions and the items of which the bank is aware of. Right? Now, everything that appears on the bank statement, it's what the bank itself is aware of. All the transactions or all the entries that reflect on that bank statement, which is the bank book. It's what the bank is aware of. Now, examples of the discrepancies that happens between the business books and the bank's books are as follow. Now, I'm going to explain the discrepancies that will reflect, or the transactions that will be recorded in either the cash receipt journal or the cash payment journal, which is the business books, but they do not appear on the bank statement. An example of those transactions are as follow. Number one, we've got outstanding deposit. Now, outstanding deposit refers to the deposit banked by the business. However, they are not yet reflecting on the bank statement. For example, if the business deposit on the last day of the month, if it deposit an amount of money into its business bank account on the last day of the month, after the bank has closed its books, which is the bank statement, and sent it out, then obviously that deposit amount will not reflect on the bank statement of the current month until the next working day of the following month. That's when it will reflect. So that we call it outstanding deposit. Number two, outstanding check. Now, outstanding check refers to the checks that have been issued to the bank, right, but have not yet presented for payment. So remember, I've been talking about checks. So in grade 11 accounting syllabus right now, we no longer deal with checks. Where I'm talking check, you must note EFT. The checks are replaced by EFT. So I'm just talking about the checks because most of the textbooks that we are using as grade 11 learners, and we deal with the bank reconciliation chapters, you will find checks. You won't find EFTs unless if the books are updated. You received a new book that is updated, then it no longer shows the checks, it shows only the EFT. But if the textbook that you're holding right now, it still mentions checks when they show you the bank reconciliation chapter. So where it says check, please underline where it says check and write EFT with a pen. So EFT will be replaced by, check will be replaced by EFT. So where they say outstanding check, they will now say outstanding EFT. They won't say outstanding check. Even in your exam test even in your test or exam, you won't find where they say outstanding check. They will say outstanding EFT. Make sense? Number three, the bank charge. Number three is the bank charge. So the bank charges will reflect on the bank statement, but they will not reflect into the business book, which is the cash receipt journal or the cash payment journal. So the bank charges, those are items that will only reflect in the bank statement, but not in the cash receipt journal or the cash payment journal. Now you can see how the transaction can appear in the business books but not in the bank's books, or how the transaction can appear in the bank's books but not in the business books. Now the same thing applies. There are transactions that will appear into the bank's books but not into the business books, and which are as follow. Number one, we've got the bank charges as explained. The bank charge will appear, or it will reflect on the bank statement but not on the business books. Now these bank charges are as follow. Example of bank charges are as follow. Number one, we've got interest on overdraft. Number two, we've got commission. Number three, we've got interest received or interest paid. And number four, we have stop order and debit orders. So those are examples of bank charges that will only reflect on the bank statement, which is a business book, but they will not reflect on the bank's book. Right? Now, these charges or these bank charges, all of them, they will reflect as a debit entry on the bank statement, or they will reflect on the debit side of the bank statement. That's number one. Number two, Money deposited directly into the business bank account by a third party. Third party, we're talking about maybe a customer of a business. For example, someone who has rented our premises, okay, a tenant, we call them a tenant, deposit a certain amount of money directly into the business bank account. Obviously, the bookkeeper will not be aware, or you as an accounting learner acting as a bookkeeper, you won't be aware of that deposit until you receive the bank statement. So obviously, when the tenant deposit, all right, now that transactions will only reflect on the bank statement, but not on the business books. That's number 2. Number 3, the bookkeeper's error. Now, bookkeeper's error can include errors such as omission, okay, or the bookkeeper has forgotten to enter a transaction or to record a transaction. So those are examples of the discrepancies happening between the bank book and the business books. Make sense? Now, that leads us to what is known as the reconciliation procedure. I think I have explained much things that you need to be aware as a grade 11 accounting learner. So now I'm going to share with you the reconciliation procedure. We've spoken about the discrepancy. Now you know what the discrepancy is. And remember, the word discrepancy, you will find it on your question paper. They will use word discrepancy. So you must know what a discrepancy is. Examples of discrepancies. Now, here we're going to share what is known as the reconciliation procedure. Okay? We've got the reconciliation procedure. Now remember, once the bank statement is received, when we do the reconciliation, when we start reconciling, which is reconciliation procedure, an item for an item comparison between the two sets of books, which is the bank statement and the cash receipt journal and the cash payment journal, will need to be made, okay? Will have to be taken into consideration. Now, when you receive the bank statement, what you need to do, number 1, is that you need to compare the deposit shown on the bank statement with the deposit recorded on the cash receipt journal. You look at the deposit on the bank statement and you compare it with the deposit in the cash receipt journal. And then you circle or you tick off those deposits that appear both on the bank statement and the cash receipt journal. That's number 1. Number 2, you are going to compare the checks or the EFTs shown on the bank statement with that shown on the cash payment journal. The same procedure applies. You tick off or you circle those EFTs that appears on the bank statement and the cash payment journal. This is the reconciliation procedure that you do. Now, once that is done, once you have done comparing the deposit and the checks, the third step that you need to follow is that all the transactions that appear only on the bank statement but not on the business books, aka cash receipt journal and cash payment journal, will have to be recorded into the cash receipt journal and the cash payment journal. They will have to be recorded as such. All right, all those transactions that you see that appears on the bank statement but not on they will have to be recorded into the business books. Now, for practical purposes, this is what you need to understand. When the bookkeeper or when you as a grade 11 accounting learner receive a bank statement, all right, and acting as a bookkeeper receiving a bank statement, so the bookkeeper normally do not total the total receipt, the cash receipt and the cash payment journal. They are not total. The bookkeeper will leave them open until the bookkeeper receives a bank statement, and then once the bank statement is received, the bookkeeper will make comparisons and therefore record the transactions that appear on the bank statement only into either the cash receipt journal and the cash payment journal. Thereafter, that's when the bookkeeper will close off the cash receipt journal and the cash payment journal. But according to your syllabus, the total receipts and the total payment will be totaled you will find them total, right? And in this case, all the transactions that appear on the bank statement, because the cash payment journal and the cash receipt journal is already totaled, those transactions that were supposed to be recorded into the cash receipt journal and the cash payment journal will now have to be recorded directly into the bank account, into the general ledger, right? They will have to be recorded directly into the bank account in the general ledger. Now, the double entry principle will be maintained by either recording that transaction into the debit side or the credit side of the bank account. So this means that the bank account will have to be corrected by recording additional amount or additional transaction that appear only in the bank statement, and then rebalance that bank statement, right? I mean, rebalance that bank account, not the bank statement. Now, once that it is done, remember as a grade 11 accounting learner that it will still be not possible for you to see if the error has been made or omission, okay, or the transaction have been omitted. It will still be impossible or not possible for you to see if you've made an error or an omission, right? Now, in this situation, it will be necessary to reconcile these two sets of books, right? Now, the word reconcile means to make compatible, to make them the same. They must be the same, or to make compatible, okay? Now, this reconciliation is done by preparing what is known as the bank reconciliation statement. And when the bank reconciliation statement is prepared, the balance as per the bank account in the general ledger must correspond with the amount in the bank reconciliation statement. However, even if everything has been done, it is still possible that you will find that the balance as per the bank account does not correspond with that of the bank reconciliation statement. And if that happens, that means there was an error made somewhere, and all the checking procedure must be redone again, right? There was an error made somewhere. Now, here are examples of items that normally appear on the bank reconciliation statement, and those are outstanding deposit, outstanding check, and the bank's errors. Those are the items that will be recorded into the bank reconciliation statement, and then you balance the two sets of account, right? Now, that leads us to the format of the bank reconciliation statement. Now, as a grade 11 accounting learner, you need to remember or drill this in your mind that there is no fixed format with regards to the bank reconciliation statement, the format of the bank reconciliation statement. However, here's what you need to know. If the bank statement shows the credit balance at the end of the month, this means that the bank owes the business money, right? And all the deposit made by the business will increase the amount owed by the business, owed by the bank to the business, right? However, if the bank statement reflects or shows a debit balance, right, this simply means that the business owes the bank money, and all the payment made by EFT or any payment made, they increase the amount owed by the business to the bank. Now, I hope I have tried my best to share with you what I know with regards to the bank reconciliation statement. And if you liked the content of this video, please indicate to me by giving it a like button, and don't forget to share this video to other learners who might be interested in knowing this information. And also, do not forget to comment on the comment section below with your question. If you've got any question with regard to the bank reconciliation, or if previously when I explained I missed something and I confused you, please comment on the comment section below and let me know what is it that I confused you about, and I'm going to quickly respond to you, right? Now, until next time, before I forget, if you're looking for a tutor who will teach you an accounting, right, I just want to let you know that, please note that I provide an online accounting lessons, right? An online classes. So I teach you online. It's not a pre-recorded like this one that you're watching right now. So in that case, I'm going to teach you from the comfort of your own home. You don't have to worry about the transport cost. You don't have to worry about the distance. So it is safe and convenient because you learn from wherever you are. As long as you've got a smartphone, access to internet, and the laptop, right? As long as you've got access to internet, laptop, or the smartphone that you are currently holding right now, you and me are ready to go. You're going to connect with me, and it's convenient because you are able to ask me questions, to raise hands, to stop me if I'm moving too fast, and then you'll be able to see my whiteboard very clear. It will look like you are in class, but the difference is that you are at your own home, safe, right? Now, until next time, me, the relentless Monama, Humphrey the man, humble and intelligent King Hannibal, the RMH himself. I'll see you in the next video, and make sure you see me in that upcoming next video. So make sure you look above there, you'll see a video popping. So the next video that you must be seeing after this video is with regards to the creditors reconciliation. So if you want to see that video, just make sure that you watch above there. But if you don't see that video popping up, just so you know that it hasn't been uploaded. And if you're ready for that video, please comment creditors reconciliation. Till next time, have a wonderful accounting journey, and I'll see you in the next video.